This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Saudi Arabia and Russia, the world's top two oil exporters, will discuss the situation on the oil market and oil prices on Wednesday amid the escalating conflict between Israel and Hamas, President Vladimir Putin's top oil official said. Crude oil prices spiked in the wake of a massive incursion into Israel from Gaza launched by the Palestinian Islamist group on October 7. Russian Deputy Prime Minister Alexander Novak greeted Saudi Arabia's Minister for Energy Prince Abdulaziz bin Salman in Moscow on Wednesday in a video posted online by Russian journalists.
Oil edged higher on Wednesday as investors grappled with the prospect of supply disruptions due to the Middle East turmoil. Brent crude rose 25 cents, or 0.3%, to $87.90 a barrel by 0550 GMT. U.S. West Texas Intermediate, WTI, crude rose 24 cents, also 0.3%, to $86.21 a barrel. Brent and WTI surged more than $3.50 on Monday as the military clashes raised fears that the conflict could spread beyond Gaza, but settled lower in Tuesday's session.
Moving on to the top news in the energy sector.
China has reaped savings this year of nearly $10 billion through record purchases of oil from countries under Western sanctions, according to Reuters calculations based on data from traders and ship trackers. An unintended consequence of sanctions imposed by the United States and others on Russia, Iran and Venezuela has been to lower the oil import costs for refiners in top economic rival China, which often criticizes such unilateral penalties. Reuters' analysis of China's savings on oil purchases from the three sanctioned countries compares what Chinese importers would have paid by purchasing similar grades from non-sanctioned producers.
Total fuel and crude stocks held by European refiners stood at 1.02 billion barrels in September, down slightly from the previous month but up 3% from a year earlier, Urals stock data showed on Tuesday. Middle distillate stocks were up more than 9% from a year earlier at 391 million barrels, while gasoline stocks were stable over the same period. European refiners' crude intake stood at 9.29 million barrels per day, BPD, 0.4% higher than August levels, but more than 2% lower than levels a year earlier.
Next, we have the top news in metal markets.
The European Union is planning anti-subsidy investigations into steelmakers producing to excess in countries such as China as part of an agreement with the United States to end Trump-era tariffs, two EU officials said on Tuesday. The Financial Times reported on Tuesday that the European Union planned to announce probes against Chinese steelmakers when US President Joe Biden hosts European Commission President Ursula von der Leyen and European Council President Charles Michel on October 20. A joint statement due at the end of the summit is expected to say the European Union will use its trade defense instruments to assess the market situation for steel, but not mention China.
The London Metal Exchange, LME, has launched a new collaboration on product development with its Chinese rival, the Shanghai Futures Exchange, SHFE. LME Chief Executive Matthew Chamberlain said on Tuesday. The announcement came after news last month that SHFE was looking into the possible launch of a nickel futures contract for international use. The LME, owned by Hong Kong Exchanges and Clearing, HKEX, is the world's largest and oldest metals forum. We will now look at the top news in the agricultural sector. Indonesia, the world's biggest palm oil exporter, will launch its crude palm oil, CPO, futures exchange on Friday, but it will not make trading via the exchange mandatory, its chief regulator told Reuters on Wednesday. Authorities in the Southeast Asian country had previously planned to make it mandatory for all CPO exports to go through the exchange, in order to drive global palm oil prices and create benchmarks similar to those in Kuala Lumpur and Rotterdam. This future exchange will hopefully create the CPO price reference for Indonesia, so we can have data and create better policies related to the industry, Didit Norditmoko, head of the regulator BAPPEBTI, said in a phone interview.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.